Palantir Technology stock has delivered an incredible rally that has caught the attention of many investors over the past several years. Since 2022, the company's shares have risen by more than 2,000%. This massive increase demonstrates how strongly the market has embraced Palantir's artificial intelligence solutions and its overall vision for enterprise artificial intelligence. Much of this enthusiasm centers on Palantir's artificial intelligence platform, which has played a critical role in fueling the company's revenue growth and its broader expansion into new markets. The speed of this rise is impressive, but it has also led to a very high valuation that some investors might see as concerning. Palantir currently trades at a price-to-sales ratio of 134.42 times and a forward price-to-earnings multiple exceeding 738 times. Those numbers are significantly higher than what most companies carry in the market, and because of that, some analysts believe such valuations could limit the stock's upside potential. However, Palantir has consistently proven that it can outperform market expectations. The company has not only maintained its growth, but has also strengthened its presence across commercial and government sectors. Its most recent quarterly earnings reinforce this narrative. For the first time in its history, Palantir's revenue surpassed the $1 billion mark in a single quarter. Year over year, revenue growth accelerated to 48%, which shows that the company is not just sustaining its momentum, but is actually increasing the pace of growth. This pattern of accelerating revenue has persisted over several consecutive quarters, and this trend indicates that businesses are increasingly willing to adopt Palantir's artificial intelligence platform. This raises the question of whether Palantir can maintain this performance and possibly achieve Wall Street's highest price target of $200 in 2025. Investors are considering two possibilities. The first is that Palantir will continue to grow at a rapid rate and justify its valuation. The second is that its elevated valuation could become a barrier, preventing further upside. Looking at the available data, strong demand for Palantir's artificial intelligence platform is expected to remain a major growth driver, especially in the United States. The platform has proven its ability to deepen relationships with existing customers and win over new clients at the same time. Evidence of this momentum is clear in the company's United States commercial operations. Revenue from this segment grew 93% year over year and 20% compared to the previous quarter. As a result, the segment's share of total revenue increased to 31% from 23% the year before. This type of growth suggests that Palantir's solutions are increasingly appealing to companies that need advanced artificial intelligence tools for production-level tasks. The momentum is not limited to revenue figures alone. Contract bookings further highlight the company's strength. In the most recent quarter, United States commercial total contract value bookings climbed to $843 million, representing a 222% year-over-year increase. Over the trailing 12 months, Palantir secured $2.8 billion in United States commercial bookings, which is 141% growth. The company's customer base has also grown significantly. At the end of the quarter, Palantir reported 485 United States commercial customers. This represents a 64% increase compared to the same period a year ago. These numbers show that Palantir is not only expanding the value of its contracts, but is also broadening the number of clients using its services. Growth in the government segment reinforces this story. United States government revenue increased 53% year over year and 14% sequentially. This performance was supported by several major contracts. Among them was a $218 million award from the United States Space Force. Additionally, the Maven Smart System contract ceiling was expanded by $795 million. Perhaps most notably, Palantir secured a 10-year agreement with the United States Army worth up to $10 billion. This deal combined 75 separate agreements into a single framework, which simplifies operations and strengthens Palantir's long-term relationship with the military. Overall, Palantir achieved record levels of contract activity. The company reported $2.3 billion in total contract value and $684 million in annual contract value for the quarter. It closed 157 agreements worth at least $1 million each. Of these, 42 contracts were valued above $10 million. Spending from Palantir's top 20 customers also increased meaningfully. On average, these clients contributed $75 million in trailing 12-month revenue, which is a 30% increase compared to the previous year. Retention metrics underscore this growth as well. Net dollar retention improved to 128%, which is 400 basis points higher than in the previous quarter. At quarter end, Palantir's total remaining deal value reached $7.1 billion, a 65% year-over-year increase. Remaining performance obligations grew to $2.4 billion, marking a 77% rise. Palantir's profitability is improving alongside its revenue growth. The company is successfully expanding its margins, and management expects adjusted operating margins to rise in the second half of the year. It did, however, caution that near-term expenses will increase due to seasonal hiring needs. Despite Palantir's strong financial performance, analysts remain cautious because of its lofty valuation. As of now, Palantir stock holds a consensus hold rating among Wall Street analysts. Even so, the most optimistic price target on Wall Street is $200. This target represents an approximate 20% gain from the previous closing price of $166.74. Considering Palantir's ongoing strength in both top-line growth and profitability, this goal does not appear unattainable. Further supporting optimism, Palantir recently issued guidance of $1,085 million in revenue for the current quarter. This projection suggests an increase of more than 8% compared to the prior quarter and reflects the company's highest sequential revenue growth outlook ever. Additionally, it represents a remarkable 50% growth compared to the same period last year. Palantir's management team also raised its revenue forecast for the entire year 2025. The new midpoint of guidance is $4,146 million. This figure reflects a 45% year-over-year increase, which is 9 percentage points higher than the previous forecast. This upward revision represents the largest annual revenue guidance increase in Palantir's history, highlighting management's confidence in its business trajectory. Taken together, these factors suggest that Palantir's strong demand, expanding customer base, record contract wins, and improving margins position the company well to sustain its hypergrowth. As long as Palantir continues to execute on its strategy and deliver results, reaching the $200 milestone in 2025 appears realistic. While some investors might be concerned about the risks that come with such a high valuation, the company's consistent performance provides a strong counter-argument. Palantir has demonstrated its ability to convert large contracts into long-term partnerships and to increase spending from its most important clients, which should help stabilize revenue even during market volatility. In conclusion, Palantir's story is not just about its past growth, but also about its potential for future success. The company's artificial intelligence platform has positioned it as a leader in the enterprise artificial intelligence space, and its strong ties with both commercial and government customers create opportunities for continued expansion. If demand remains strong and Palantir keeps delivering results that surpass expectations, its stock could very well reach the $200 mark in 2025. Investors will continue to watch closely to see if Palantir can maintain this pace and justify its valuation, but based on current trends, the outlook remains promising. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.